My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate, teach you, put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Bear with me. What if this whole market, after this incredible run, is actually undervalued? I know it sounds crazy. I mean, we've had just a remarkable blitz up. We just came through then, after that, a brutal sell-off. All the buyers vanished. Now suddenly we're back. Dow surging 328 points, S&P jumping 1.27%, Nasdaq pulling 1.87%. Why? Why did it happen? Why was so great today? Because today is Merger Monday. Monday, it used to be the day we always came in mergers and it stopped. Well, guess what? It's back and it's bigger than ever. So I brought out the Merger Bot. Merger. Yes, I haven't used the Merger Bot, I don't know, 4 or 5 years. Merger. And it's back. Merger. All right. Back and bigger than ever. Now, we spend a lot of time trying to figure out what stocks are worth, right? I mean, we do that, all the price to earnings, and we price to sales and book value, all that stuff we try to do. But, there's another whole way to value a business. You look at what another business might be willing to pay for that business. And today we got a wave of huge mind-numbing deals that suggest there are many real bargains out there in M&A. Merger. Let's start with a stunning announcement this weekend that Gilead Sciences, the gigantic biotech that conquered Hep C, was acquiring Immunomedics for $21 billion. Ha, see, it's real. It's fact. The stock of Immunomedics traded at $2 just 4 years ago. $4. It was at $8 and change as recently as April. It had 3 CEOs in 18 months. But Immunomedics also has a viable cancer franchise that some analysts think could be a huge business in a couple of years. Stock had only rallied to $40 just this summer on rumors of takeover. Then Gilead comes in and pays 108% premium on top of the 40, which is on top of the 8, which is on top of the 2. And guess what? You're getting $88 per share from Gilead Sciences. Even after that massive price tag. So how much Gilead stock, what should that be down? No, it rallied. The market's judgment is that this deal is good for Gilead, which suggests that IMMU must have been radically undervalued even at 40.
House of pleasure.
Okay, so how about one, Cramer fave Nvidia? They're paying $40 billion in cash and stock for ARM Holdings. This is a deal that will crown Nvidia as the king of the semis by combining their graphics and data center chips with ARM's processors for computers and cell phones. 2 areas where Nvidia had not a presence. They're paying a fortune here. And while Nvidia stock was already up more than 100% for the year, Nvidia stock still roared again today. The deal is a game changer. The only real objection, some analysts believe the antitrust regulators will put a stop to it. But I spoke to Jensen Huang, and Jensen, he's Nvidia's bankable CEO. He was on Squawk on the Street with me this morning, and he was adamant the deal would pass muster. Given that he finally got that fabulous Mellanox deal through, even as the Chinese government tried to block it initially, I believe him. He says it will be immediately additive to earnings, and I believe that too. It could end up being a steal because of its ubiquity. Here's what Jensen told me this very morning.
ARM is an extraordinary company. This is the company that built the world's most popular CPU. It has built 180 billion units over its course of its history. 22 billion of it just last year, and so they're in everything. They're in everything.
People are believers. Up $28 today. Up $28 on paying $40 billion for a company that most people don't even know exists. Now, a lot of people think Nvidia stock is hideously overvalued at these levels. Of course, I think they're wrong. It's trading at 57 times earnings, for heaven's sake. But you know what? Nvidia looked ridiculously expensive in 2018, too. The thing is, when the actual earnings came in, they were so much higher than expected. The stock looked absurdly cheap in retrospect. It was trading at 20 times earnings. 20 times earnings. I think the same thing could happen again here, even as Nvidia is already the largest semiconductor company on Earth by market cap. You know what? Jensen's worth
Merger.
Might see this guy back. All right, how about this TikTok craziness?
Merger.
This popular Chinese social media site, which is really for no, Jimmy, chill. It's for people who don't really have a real grip on what Tolstoy and Shakespeare have to say. It's being strong-armed into spinning off its American business. A lot of us assumed it would go to Microsoft. They wanted it. Turns out Oracle wants it too, and TikTok went with them. Oracle's been pretty mum on the deal, but we know there's a ton of interest from other players. Hey, by the way, Microsoft has teamed up with Walmart of all companies because the online advertising possibilities are too phenomenal to ignore. Do I really think Walmart's just going to go away because of a kind of a weird press release, stop trading thing? Could be a bidding war. Yet Oracle stock rallied $2 and change, a big move for this stock. This is hardly a match made in heaven. Sure, Oracle just reported a good quarter, but it's a stodgy enterprise software company, while TikTok's video sharing app is for kids. Doesn't matter. TikTok's a great asset, so the market loves it. Oh, and get this, Microsoft was up too because nobody wanted them to overpay. Next up, my Charitable Trust has this position in a little company, and it's called Seattle Genetics. We had them on air. We've actually visited them when we were in Seattle. Well, they visited with us. Now, this is a company that has antibody-based cancer treatments that I think are every bit as powerful as the one Gilead just overpaid $21 billion for. Now, Seattle Genetics didn't get acquired, but the giant that is Merck did swoop in to take a $1 billion stake that values the company at $200. It was at 150 on Friday. It closed at 171 today. Plus, Merck's giving them $600 million up front with the possibility of another $2.6 billion in milestone payments. Merck stock rallied most of the day. Okay, it closed at the end of the day flat, but believe me, people like the deal. I've taken some flack for recommending Seattle Gen because it seems stalled over the last few months. A lot of people didn't like me because of it. Nobody seemed to care about the oncology pipeline. The stock just couldn't get any lift. It was going down. Well, guess what? Seattle Genetics is on fire. So is Merck, by the way, when you take a look at the longer term. I guess they were both undervalued. Finally, there's, Nicola. Yes, this last week we talked about how this electric truck play with a hydrogen fuel cell kicker has come under fire from short sellers. There was a devastating piece of research from a short seller, which included the detail that they filmed one of their trucks rolling down a hill, then edited it out to give the impression it was running under its own power. You make that up. Today, Nicola shot back in a long rebuttal, but I couldn't get past this one line. I thought this line was what I call dispositive. Quote, Nicola never stated his truck was driving under its own propulsion in the video. No, they didn't. They didn't mention that it was shot while it was like an angle, and then they made it look flat. It's okay. Didn't seem to matter, because at one point, this jock had jumped more than 11% on the rebuttal. Why? Well, last week, General Motors took a $2 billion stake in Nikola, and they're standing by it even after these revelations. Management's adamant they've come a long way since the faked truck video, and all sorts of other alleged bad behavior. GM CEO Mary Barra came out and reiterated that they'd done their due diligence, and the trucks are very real. Weird that she had to do that, right? It's like, hey, you know what? We actually did some homework. I know you don't think we did any homework. We, did homework. The dog ate our homework. I mean, come on. And a rebuttal actually worked. Maybe even Nikola's worth more than we thought, although I'm still skeptical. And after the close, there were press reports saying the SEC is looking into the short sellers' allegations, which, by the way, means, frankly, nothing. But it did drag the stock lower after the bell. Now, you could say I'm just cherry-picking here, that all these deals are one-off situations. I think that's the wrong read, though. If the market were truly overvalued and we got this kind of M&A activity, you'd expect the acquirer stock to go down, not up. Yet these deals are forcing the bears to rethink their attitude toward both tech and, more importantly, biotech. I know for a fact that short sellers were banging down Nikola and Seattle Gen. They were on the wrong side of the trade today. I know that Immunomedics had been a laughing stock with its revolving door of CEOs. Go Google it. It's really pretty funny. But who's laughing now? What matters here is that the market has spoken. Big-time hedge fund managers may come on our air and say that stocks are too high, maybe even dangerous, that we're in a bubble, toil, and trouble. But big companies tend to know their own industries, and they seem to think many stocks are undervalued or reasonably valued. Maybe the hedge funds will ultimately be right, but not if you were short Immunomedics or if you were short Seattle Genetics. Bottom line, look, there will be more sell-offs ahead. This is still September. Last week of September is supposed to be bad. But the next time the market gets slammed, I want you to remember what happened today, and I want you to try not to be too negative, in case you need a reminder.
Merger.
All right, let's go to Uche. Uche in Alabama. Uche.
How's it going?
It's
Jim,
incredible. It's incredible today. What's up with you?
Everything's green. I'm down here in Gulf Shores about to evacuate this hurricane. I
Oh,
want to ask you
jeez.
about
Okay.
Walmart.
I love Walmart. I think Walmart is so much better than people realize. You know why? Because the snobs in New York who are analysts, they don't go to Walmart. I like my Walmarts, and I think it's terrific. And anytime Doug Lupone wants to come on air, this is where he should come on. This is where he should be, because the stock's a buy. Let's go to Taylor in Michigan. Taylor.
Hi, Jim. A big Chicago boost. Booyah!
Well, yeah, okay, right back at you on that one. What's going on?
I'm calling about Domo. The company is working towards becoming cash flow positive, and the recent quarter, coupled with a term loan maturity extension, suggests they are making progress.
They are making progress. Here's the problem. There's like 42,000 of these companies, and after a while, they all kind of get lost in the shuffle. I think it's good, Utah-based, not Silicon Valley, but in the end, there's an awful lot of these, and that does make me feel like, yes, that there's a glut of those stocks. All right, look at this, will you? I like this last one, Trice, right? Never forget the truck. The truck. But really remember,
Merger.
the market has spoken. Next time we get a sell-off, I want you to remember Merger Monday. Man, buddy, tonight, IPOs are like snowflakes. No two are alike. Tonight, I'm eyeing one of the many companies hitting the tape this week. Snowflake. Tell you if it's worth considering ahead of its first day of trading, and you don't want to miss that. Then, how a race for the vaccine could impact the overall market. And with GW Pharmaceuticals down over the past few months, is it worth considering here? I'm getting an update from its CEO. So stay with
Merger.
Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.